Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Heads up, everyone. I am streaming from Costa Rica, and the infrastructure here is a little inconsistent. For any reason there's technical issues, I will have to drop out of YouTube, and I will continue streaming in the Bookmap Discord Trader Lab community. There is a link in the bottom of YouTube if you want to access the community and the stream in real time, and there is no cost to visit the community. The other thing is, if I'm not able to continue in YouTube, the stream will be posted later for you to review. So please accept my apologies if we have challenges. Bookmap support has been working diligently with me to help resolve some of these issues, but there are limitations as far as the infrastructure here in Costa Rica. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? How we doing in YouTube, guys? Dan, are we doing okay in YouTube? All right, thank you. All right, guys, remember, if the stream goes down in YouTube, it will be posted up in YouTube so you can review later because of technical challenges here in Costa Rica. It's those monkeys. You got to blame them. So let's take a look, a quick review of what happened yesterday, if you remember. And by the way, this stream is based on auction market theory, using a volume profile as a chassis in the intraday developing time frame, integrating Bookmap Orderflow tools so we can kind of get into this, they say, the nitty-gritty. It's also based on 60 PDFs of structured trades that are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars. And of course, as always, there is no cost to visit the Bookmap Discord Trader Lab, and it is a community of like-minded traders who've come together to leverage their collective experience. So let's take a look at the higher time frame, and then let's get into it, as they say. And remember, this is FOMC day. And we have some sound effects also. That's pretty good. I don't know if you can hear, we have a little background noise here. So this is the higher time frame, and this is yesterday's RTH. Now remember, the market has been moving lower, and it has been making what's called lower value. That means the market rotates or auctions, but inside of these auctions are what's called high volume. And in the auction process, the idea of the auction is it's really shopping. And as you know, if you go to a store and if you're a shopper, you already know how the market works. You just don't think of it that way, because in our market, it's rotating rapidly. Whereas in the store, if the price is too high, maybe they'll lower it back to retail, which is this orange line. And if the price gets too low, it's on sale. You throw two in the cart, and then it comes back to retail. The other part of our market is this rotational aspect of it. If this is the outside edge of a distribution, what's on outside edges? Buy stops. Now, the day before yesterday, let's look now at this logically. As the market goes down on shorts, on sellers, and of course it rotates intraday, but just looking at a broad stroke, there's buy stops. All these shorts have buy stops above them. Buy stops here at the swings. Buy stop. And the day before yesterday, what did we not do? We squeezed out the shorts this day and this day, we squeezed them, and then we did not take out the shorts up here. Now, that doesn't mean we won't take them out in the future or even today. What it means is the sellers were aggressive out here, and we couldn't get the buy stops above this swing. That set up yesterday's shorts. And as you guys know, yesterday we're on the short side all day, unless, of course, you have a vetted counter trend plan. So primarily in TraderLab, it was sell, sell, sell. So that was a rather productive day for those who have a vetted structured trade plan with a statistical edge, which is what the business of trading is all about anyway. So, but what about today? Well, what we did yesterday is we took out the longs in this up leg, or I should say this move up, and we still have stops under these longs, which are still potentially on the hip parade, not a recommendation. So we came down, we took out these guys, thanks for playing, broker sends you a gift basket, and then we came back to the mean or the retail price. Remember, shopping, too high, too low, retail. Now, here's another little tidbit for you. If the market is short here, let's use the same concept. These concepts operate in all fractals or time frames, if you will. And as you know, just because we had a red candle here doesn't mean the market wasn't rotating over itself. And that's the nature of how the market works. Even here in RTH, it's rotating over itself. But when you get into the intraday, it's doing the same thing. Once you understand market mechanics, you won't be surprised about what might happen, but you will always be surprised as far as how it manifests itself, because that's the random nature of the market. So what do we know? Well, just looking at yesterday, we have stops under here, but what do we know about the shorts? The market goes up to go down, and the market can go down to go up. Buy stops. Let's keep that in mind. So over yesterday's high, buy stops. Now, RTH open. Now, the next thing on the hip parade is the ETH volume point of control. It's the same thing as the retail price, but now it's the retail or highest volume from the ETH. Follow with, this is how the auction works. Now, like everything, how, when, if, part of the joy of randomness. The business of trading is not a predictive business. It's a business of maybe. However, the idea at TraderLab is to help you understand that if you're operating in a random environment, you cannot get certainty and you cannot get confirmation. What you do get is maybe. So the maybe is no different than what the casinos have. Maybe when they deal blackjack, the cards coming out of the deck will favor the house, and maybe the way the gamblers play the cards will ultimately give the house, because they have an edge, the dollars will be extracted from the gamblers, but the house doesn't control. The cards coming out of the deck are how gamblers play. So they also pay the gamblers. Have you ever considered why, if you have a vetted structured trade plan that has a statistical edge, that you still are going to be paying the other side? Because that's the random distribution of outcomes. You can't predict the outcome, so stop trying to do that, in my opinion, because we all try to do that. Who wants to take a loss? Nobody. But let me ask you the question. If you own a business, I know you don't want to pay your bills, but how can you stay in business if you don't pay them? You have to kind of change your thinking, in my opinion, to what you are actually doing here. What you're doing is you're attempting to run a business. So think of it like a business. Don't think of it like a approval process where if you, quote, have a winning trade, you're a good trader. And if you take a stop, you got to go back to work, because that has nothing to do with the outcome, assuming you have an edge. Now, RTH open. And if you have questions, please post them. I'll do my best. If you're in TraderLab, post them in there. And I hope the technical aspect of this is working. Remember, if there's a problem, I'll have to drop out of YouTube, and then the stream will be posted later on for you to review. Just a reminder, I am streaming from Costa Rica, and a string in the tin can would be generous. You can see I'm having data lag, so hopefully these streams will hold up. So the first trade that I saw, now when I say trade, let me clarify, a non-qualified trade. That means a trade has to meet the parameters of your edge. So part of that is not only the auction-based behavior, but the range. Well, if we have the open here in the RTH, and I see some selling, and now I have what's called a variable high volume node. This yellow line is retail price. So retail starts at 0, RTH open. There's more volume here, as you can see, than there was up here. We didn't have anything up here. Now this becomes what's called a variable high volume node. I made the terms up. Nobody was doing this when I started doing it, and I fell over it because of research. You guys know research. That's when you kind of see something and you go, what's that? And then you spend God knows how long trying to figure out what's going on. Because when I started doing this, nobody was doing it. So looking at phenomena of what's called volume migrations, and I call it VPOC migration. And I did a special webinar on it, and it's in the Trader Lab library if you're interested. What does it mean, right? So this is the retail price. But if it's too low, we can move away from it. Now there's more volume here than there was here. So shopping. If you go to the store and it's on sale and the price is too low, they're not going to keep it on sale, right? Remember, trading is shopping. So now the new retail price is here, too low. Now the next thing is statistically, and you have to vet this for yourself, there's over 90% probability we take out either the ETH high or low. So, okay. So I know the first trade is a long, but you got to listen to this very carefully, to the ETH high because of the statistical probabilities. You got to vet that for yourself. But I would not take it. And this is based on structured trade. Why wouldn't this trade qualify? Because of the range. Because by the time I get a trigger, the entry would be in here. Because first of all, it's got to come over this. So possibly it's too low. So there's my trigger. And then it's either pull back here for a long or in here. And by the time you're getting into this thing, you're over here. Well, the initial target is here. So no bueno, no trade. Okay. However, now let me give you the however. This is always part of the joy. The ETH volume point of control, and I'm only going to give you ballpark numbers, okay, is I think it's about 80%-ish. And I don't have the statistics in front of me, so I'm kind of giving you the broad stroke. You have to, these statistics are available. So the possibility is if I get here and I run out of buyers, then this becomes the target. So for me, the first idea was skip this and look for that. And why? Two things. One, the sellers in this leg have buy stops here. And then the longs in this leg have sell stops here, right here. So I'm thinking, well, long I can't take, short back to there, and then whatever. But don't forget, yesterday's high. Where's the stops from yesterday? You have to be thinking in multiple dimensions and also possibilities, probabilities. And what's the probability for yesterday's high or low? It's about 80%-ish. And you got to vet that. So what do I know? Long, too close. Short, high probability. And then yesterday's high probability. So what does that do for me? Well, it says don't get long here, get short there, and then think about getting long again to take out yesterday's high. That's what I know. Other than that, clueless. Not ignorant, clueless. And the problem, of course, for us is from where, when, how. But one thing to not forget, we are in a market that rotates. That means equal opportunity for either side to get abused because there's always stops on both sides of the rotations. So if there's sellers in here, buy stops here. If there's buyers in here, sell stops there. If I get my buying and I get this target, then the possibility is, okay, So let's take a look. And how we doing? I'm having latency issues here now, so I want to make sure I'm still good. How we doing? How's the audio? Dan, are we doing okay here? And how we doing in YouTube? How we doing in Discord? I need to know if I'm okay. If you're in YouTube, hold on a second. Just checking. Is that YouTube or in Discord? Sorry, guys. YouTube, hold on a second. Dan, any recommendations or should I keep going? Hold on, YouTube. Just doing okay, YouTube, I'm going to have to stop streaming live in YouTube. I will be continuing in Bookmap Discord Trader Lab. There's a link in the bottom of YouTube. If you'd like to come over there, I will continue to stream. Or if you're not able to get there, this stream will be posted later on so you can review it. Apologies, but this is what happens streaming on a tin can from Costa Rica. So I'm going to be dropping YouTube, and again, apologies, and you'll be able to find this. It'll be posted later. One moment. And thanks again for visiting the Trader Lab in YouTube, guys. Appreciate it. Use the link in the bottom of YouTube if you want to come to the Bookmap Discord Trader Lab. There is no cost, and then you'll be able to watch the stream, access 60 PDFs of structured trades, and access the library and, of course, the community at no cost. Take care, guys. Look forward to seeing you tomorrow in YouTube live. And remember, this stream will be posted later on for you to review. Okay, guys, how we doing now in Discord? Is it better? Okay, I'm going to stop my VPN. Okay, the VPN is stopped. And hopefully, let's see. All right, guys, the VPN is off and YouTube is out. Okay, guys, so we okay now in Discord? Okay, Dan, thanks. All right, guys, apologies again. All right, so too low, first target. Now, the possibilities are, and remember, the primary target here at the moment is to check the retail price from the ETH. Let's see how we do. So this sets up a first potential short. Now, again, it may not be your trade, right? You have to have a trade plan where all this is planned out. This is the retail price from the ETH. So it is possibly the first, for me, again, not saying it's a good idea, just saying it's one of them, that this is the primary thing. And this is called mean reversion. The current mean is here. So if we come outside, get this target, and then we see selling, and this is a sell trigger, and this is very micro. You could actually see the micro trigger right here, but it's not actionable. There's your sellers. So what do we know? Microstructure is here. So this is a short to there, and then whatever. and then statistically overnight mid. However, 80% probability we take out yesterday's high, right? So right here, target. Now, here's the next piece. Market goes down to go up, goes up to go down, and of course, where to, part of the thrill. And then if what you have here is longs here, shorts here, and the possibility is to keep going, of course, or rotate around and get the stops of the guys in this leg. And we don't know the answer to it, right? So that's why risk management, getting risk neutral, job number one, so that the worst happens is if you do get risk neutral, you scratch the trade and the broker sends you the gift basket. Where's the stops now? Here. Okay, so we got to think about this. Let's watch. What is this? Buy sweep, stop pick, 321 buy stops. Thanks for playing. And what do you notice up here? This is the beauty of Bookmap, is the heat map is right here. And the heat map shows us resting liquidity. And notice how as we come up, they start adding, and look here. That's kind of like a lid on a pot. That's kind of the way I think about it. Buy sweep, sell trigger. Here's the trigger. Here's the entry. Stop here. And then what? Stops are under here. So this is called rotational trading, right? Now, you don't have to be trading like this. You could take one side, both sides, no side. It's all subject to a vetted trade plan. You don't make it up here. So now, right here is where the buyers took over. So this is support right here. Why? Buyers. So if we had the buyers here, then is it possible they might still be here? And don't forget location, location, location. So a couple ways to do this. You took a short here. We are looking still to come down here. This is support. Because we need to get under here to go anywhere. If we don't get under there, could be trouble in River City. Let's watch. Under here. Now, watch this from below. Just watch it. Okay, we take it out. No big deal. Now, this here is a return to balance. Let me explain what's going on here. Two-sided trade, right? Now, the important piece for me is we are outside of this distribution. This little thing that happened here is an auction, and you could see it over here. The outside edge, and all this, we were discussing all of this in TraderLab, right? So it's here. I'm just going to label this. It's called a low volume node. Now, I know all this terminology. You're probably going, what the heck? I know. But you need to understand how the market works. What the market does is it auctions. It's what it's trying to do is you've got a sweep here. Sellers are here. Sellers are here. The buyers are stuck. These guys right here, this buying, it's delta. And what is the delta? It's buy stops are also part of delta, market orders, aggressors. Well, how do we know if it's a stop or somebody initiating? Well, you wouldn't know unless you had a stop and iceberg detector, which kind of give you a little insight, you know. Break low, selling trigger. See you later. Okay. Support, right? Bounce, mid VWAP. Who knows? Where's resistance? It's back out here. So if we're in two-sided trade, and you don't know this until hindsight, naturally, then resistance is going to be out here and here. So what we're doing is it's a reversion trade, but we don't know it is until later, you know, part of the joy. Outside edge is here. And the reason it's an outside edge is this. Fell away from it. Too high. Come back to the mean, which is the developing volume point of control. Buyers are here. What's happening over here? Something different, maybe? What is this? Let's look at divergence. So I call it stop divergence. It's the only thing I use from indicator days. I don't use indicators. This is actually a language. One of the things about the auction and maybe getting as close to the market as we can is what order flow is about. And then it's about, what does it say? Well, if the market's coming up, I see 16 buy stops. Thanks for playing. Another coupon to the buffet for our traders. Now what? 7. Well, 16, 7. What happens if the market goes higher and I got less of something? Well, if I got less stops and I still see the delta, then what? Well, if I run out of buyers, who might be buyer stops, then what? Sellers. Rotate back. What's happening up here? Do you see aggressors up here? What do we got up here? Does this look familiar? 16, 7. 17, 2. Divergence, divergence, divergence. So this is how I incorporate stop and iceberg detector. Now, icebergs are important also, but retail traders, us, we are the minnows in the market, and we're the weak hands. So retail buyers here are buy stops. So too high. Now, two things, of course. Keep going, or outside edge of this developing distribution. So this is like my dividing line. Okay? It's right here. And then either we keep going and everybody gets run over, or watch. Buyers are here. Exhaustion here. No clue. Hindsight's pretty clear about this. But I see the divergence here. That's what I want you to see. Here, nothing. Chop, chop, chop. What's happening here? Nothing. What's happening down here? This is a consolidation. Let me show you what this says. Volume is here. Buyers are here. The seller gets below the buyer. Stop divergence. Trigger. Pull back. Here. Chop, chop, chop. Trigger. Pull back here. Trigger. Pull back to the volume, which is here. All these are short entry potentials, and of course the potential to take a stop. Let's stay real. Then where's my support? Well, I had support here, right? Which was there. Now I got support here. And there was a sweep here, which sets up potential for this. This is how the sweep detector, and I really like the sweep detector, and it's not a mechanical indicator driven process. It is more order flow driven. That's why when we have this, it sets up the short. That's why when we have this and the liquidity, look at what you got. Liquidity, liquidity, sweep, counter rotation, location, location, resistance. Okay? Outside edge. I'm just showing you minutia. You might be interested in that. Trigger. So short into this. Now what? Let's go. Now it's trade management. Now here, right here, there's a change. Let's look at it. Now, nobody knows, so let's stay calm about all this. Nobody knows. At least nobody's told me. And I've been asking those questions the same as you. Except for me, it's 45 years of going, what's going on? Since I know I don't know, my solution is to accept I cannot predict and to have a trade management process. Let's look at that for a moment. So triggers here, shorts here. Let's look. Into the minutia we go together. Microstructure. Sellers are here. Sellers are here. Do you see a buyer? Last buyer up was up there, right? I mean, there's buyers and sellers in here, but I want the volume is what I'm interested in. Selling iceberg, 2 buy stops. Thanks. Micro high volume structure in here. Sell trigger, test. I'm not going to draw the lines I normally draw. They're in a lot of the streams that are posted in the Bookmap Discord Trader Lab library. Another. Now, it's not a short entry for me. It is a trade management. but it's a trigger. It's the same as this, except the trigger's at location, you see. These are sequential triggering structures, but they're auction-based. Sellers are here, and the buyers were there. That's why you get the chop. Then you get the sellers below the buyers saying, we'll see you later, send a postcard. And this is resistances right there. So you could use these structures for trade management. And of course, you have to vet these. I just think I'm going to share that with you a little bit. And now we have the chop, chop, chop here. Sellers are here. Sellers are here. Buyers are here. Sellers are there. Trigger. Test. Test. Where are we going? I guess we're going to 0, aren't we? Where is the next target? It's here, statistically speaking. Let's watch. Sellers are here. Buyers are now here. You see something a little different. I'm starting to see some buyers. Sellers are here. Sellers are here. Buyers are here. And right here, the teeth chatter a little bit. What else do I have here? A low volume microstructure, low volume node. Right there, that little notch. What it's doing is we're bracketing this consolidation of volume. Inside of this volume, right here, I'm going to draw a little line for you so you can see it. This is where the high volume is. So as far as I know, and again, I really don't know anything, but currently, sellers are here. Buyers now show up over here. But the sellers are absorbing these buyers here. I get below the buyers. Everything's looking good, Lewis. Resistance, resistance, resistance. Going lower. Okay? Looking for this and maybe out here. And because this is yesterday's retail price. Not unreasonable to come here and to come here. Just saying. Change. Right here. What happened here? You notice how it's been the buyers getting absorbed, the buyers getting absorbed, the buyers getting absorbed by the sellers, going lower, going to 0, and then buyers break high over these sellers. This is a buy trigger. Now, a buy trigger at this location is not a get long. It's a push the button and blow the canopy off and get out of Dodge, if that's your plan in trade management. So let's look. And that's trade management. Because this is what's going on. Are you guys tracking? And how are we doing in Discord? How's our audio holding up there? Okay, thanks, Dan. Okay, so from a trade management point of view, subject to your plan and means you have it vetted, accepting in a random environment. This is, I'll see you later. You punch the eject button and you're out. Or whatever your plan is. Now what? What are we doing? Coming back across the range. Now, when this happens, for me, it's kind of like, what's going on? I mean, here, once I see this, then I know the possibility is, and remember the statistics, 80% probability to take out either yesterday's high or low. Well, remember, and what else? Shorts are in here. Where's the stops? Over here. So when I'm trading, I'm always thinking about from both sides. You know, you can't be myopic in this business. You really have to think about if this, then that. If not, then what? Then that. And if you get the then what and you get the then that, then either you have a trade to participate or you kind of go and you do a timeout. And you wait for your next structured trade. So let's take a look. We have a sweep. Let's see what we get. Often when we see buy sweep, we're going to see a counter rotation. Now, part of the joy of all these things is to where. What do we have happening here? Let's come back. Right here, we now have a new distribution forming. It looks like this, and a distribution is nothing more than a consolidation. There's an outside edge, which is right there. That's another low volume node. I'm going to mark it for you so you can kind of see structure. Structure in the auction is really what we're leaning on, because the reason you have low volume at a location, once you come up here, is why is it low volume? Because there was urgency here, and then there was very little trade here, and the market took off. So what that tells us at a low volume outside edge of a distribution is that there's going to be stops here. So that's one thing to know. And the other thing is 80% probability to take this thing out because it's yesterday's high, and you guys know the statistics from the top of the stream. So let's look. Now, yesterday's high. Two possibilities. And this is narrated in the stream, right? Narrated in TraderLab. I was posting this morning. And it's not, there's no trade recommendations. All it is watch. Watch this area. What is this right here? Let's go take a look at this. I'm going to throw a little box around it so we can see the structure. So this is your sellers are here. Your buyers are here. This is a trigger. This is a test of the high volume. I'm going to put a little line, and you see that little notch sticking out there? That is the high volume. So think of this like a little VPOC, or it's a high volume node. High volume is like a retail price. If the price gets too high, and that's why I call these fractals, they're not time-based, they're auction-based. The buyers are here. The sellers are there. The high volume is here. Think of it like going down the store, down the street, Saturday night, pint of ice cream. I'll pay anything, won't you? Trigger, but the price is too high. The sellers take over, which means they're getting in the car and they're driving away. Now we come back, and this would be your entry, 1 tick below, 3 ticks above, not a recommendation. Resistance is here, and of course you can take a stop with the best of us. Test of the volume, microstructure, short. Now, things get more funky. This is called VPOC migration. What this represents is the high volume for the entire developing RTH session. So we're going to label this variable high volume node, just in case. We come back and visit it, which the market can do. Doesn't mean it will, it might. And then this is the new retail price. So I'm going to label this one. If you notice, the volume has moved higher overall. So that is saying at the moment this is too low, and this is the new retail price. And then there's, of course, possibilities. Let's talk about those. And I'm just labeling this one up here just to get ahead of it a little bit. So let's clean this up a little bit, open this up for you. So just to reiterate, this is a short if it's in your, if it's part of your thing, all right? And out here is support. This is support because that's a buy trigger, isn't it? So if you were long, let's think about this. If you were long, you'd use this as a trade management tool, might you? And where's the high volume? Let's come back and take a look. Where is it? So this process, what I'm doing with this is I'm just following the auction. Chop, chop, chop. Sellers here, buyers here. Buyers are above the sellers. Trigger, and it's not a long. I want to emphasize it's trade management. Test of the volume north. Okay. Break. higher. And at this point, no clue, break. So here we get the break, and then this becomes resistance here. And I don't have a trigger here because what I'm looking at is a buyer, 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 and this seller was absorbed. Then we get our buyers here, and now we get the face off. It's like the shootout at the OK Corral. Sellers are under the buyer. Now, sellers are under the buyer here too. So, sellers, test. Sellers, test. Okay, test. Where's support? Wasn't it there? Let's see. Right here, we bounce the support. Now, here's an interesting phenomenon. You get VPOC migration, and I think I posted in TraderLab. I can't remember. It's all in there in the chat. If this is too high and we reject it, then we can roll down. If we go this way, we can continue higher, and resistance is up here. Now, this is a trade we discussed in TraderLab. Let me explain it to you. There's two trades that are going to set up here that are structured trades. One is called VWAP to VPOC, which is there, and the other one would be mid to VPOC. Two structured trades. Now, it is FOMC, but if you have a trade plan, it's not relevant that it is FOMC. The question becomes, are we going to get buyers above this high? And that is really the question, right? So, two places to get long. And those of you, if you took this trade, the VWAP, that is a structured trade if you vetted it. So what happens on this trade is, let's look at the trigger. Chop, chop, chop. Sellers are here. Here, actually, here. This is a sell trigger. There's your resistance. Chop, chop, chop. Break low. And this is the buy trigger right here. Break high. Test of the volume. Your stop has to go under here. And your job is to get risk neutral. The outside, and I think I posted this in TraderLab, is around 3. So the idea was to come up here to get scaled, and then you're going for here for the target. And that trade took a stop, unless you were able to get risk neutral. Let's assume you didn't. So where's the next trade? Well, it's like, bang. And then, of course, we have choice words and emotional responses. But the job of a trader is to be a trader. And to be a trader, it means, where's my next trade? Has the structure failed? No, it's just one location. Structured trade. Where's the next one? Mid. Now, and we have, let's just stick with the mid. So now, let's watch. Sellers are here. Sellers are in control. Going to 0, right? Let's watch. Buyers are here. Sellers are here. Sellers are in control right here. Now, I have a little personal philosophy. I'm not saying it's any good. You have to always vet everything. And that is, don't buy the mid. Let the stops get taken. Then look at the mid. Retail traders just mechanically buy the mid. And of course, like everybody in the casinos, the gamblers get paid. Okay, they deserve to get paid. However, stops are going to be under this. So if somebody gets long here, their stops are here. Let's see what happens to these guys. And let's see our trigger. So stops are here, 98. Buying iceberg, 35 sell stops coming out. Thanks for playing. Again, a nice ticket to the buffet. And chop, chop, chop. Sellers, sellers, stops. What is this? Stop divergence. Remember? What is this? Liquidity comes in the book. It's kind of like pressure. Think of a pot with water or soup, and it's pressure. So this, once we break above this seller, once we break here, we now have a trigger. Buy sweep. So we have a triggering structure. Let's watch. you would get long. Your stop needs to be 3 ticks under here. You've got this. And now you're going for the same trade that failed over here. Same trade. It's just different location. Location, and we're going here. So the structured trades are VWAP to VPOC, mid to VPOC. So both these trades are structured trades. And of course, the outcome is random. Target. Okay? Now, so it's like, oh, that's lovely. Now what? Variable high volume node, new retail price, micro structure. Let's look. If this is too high, and why might it be too high? Because the retail price is now here. So 2 possibilities. Too high, counter rotation. Too low, push off. This is like this little bracketed area is very important for potential continuation. There's also another piece I have to mention to you. The first hour's high or low has over 90% probability that we're going to take one of them out. And given that we are returning up here versus just squeezing and going south of the border, suggests maybe continuation. But let's see. Notice the behavior off the developing volume point of control, the variable high volume node. Depending on your plan, this can be an aggressive short or nothing. The primary trade is to there. It's called mean reversion. That's the mean. And yes, it's mean. Pull back. So with this, here's the possibilities. Scale here, hold it for the moon, exit here, or get risk neutral here, or get risk neutral along the way. Your stop would stay under here, and then it's trade management. Up to you, right? Up to your plan. Let's see what it does. Watch. So, where's resistance? There and there. There and there. And this comes into the book. Let's watch. Now, this is two-sided trade, and it could definitely scramble you. So you always have to have a trade management plan. We can't predict anything. So let's watch. So we take out the, I think I'm at 9, yeah. First hour's high. That's the IB stat, over 90% probability. Where are we? Interesting. So here's your buy sweep, and we look for reversals potentially after a sweep. I haven't seen any of this. So let's look at this. Buyers are here, you got a sweep. Sellers are here, they take control here. Here's the micro high volume structure. There's 2 places. Let me show it to you. Now, your plan may not be to be taking all these. It might be just to take a couple of them that you have vetted. You may not be trading this. Why? You may not be fading because we took out the first hour's high, and it's possible we continue. If you are a counter trend trader, now how do you define trend? It's subject to your quote time frame or fractal. This is a short. Here. Back to here. Outside edge, right here. This is called rotational trading. And it's a separate plan in a plan. And it might not be your thing. It doesn't have to be your thing. You're not here to keep busy. You're here to wait for your edge. And if you don't have one, put the car away. Stay in the garage. Get in the Barca Lounger. We have a trader in Trader Labs named Rod. He has a Barca Lounger, and he also goes to the gym. I think it's very good that he stays healthy. Too high, test, counter rotation trade, okay, counter trend, outside of the LVN. And where is our volume point of control? I kind of lost it. I think it's here. It's here. This is called mean reversion. This would be the target. This over here. I'm going to get this out of here just for now. That's the VPOC, volume point of control. So what we're doing today, and it is pre-FOMC, is rotational trading. So subject to, you might only be taking longs today and you forget about this stuff. Instead, you see trade management. So let's say you're holding a long and you get the sweep and you get a sell trigger. What do? Well, you exit if you're only taking longs, and especially if we come back to the selling trigger and the buyers get absorbed again, you hit the plunger and out you go. Or you reverse and you come here and then maybe down here again. Does that make sense? How we doing there in Discord? Are we still functional? Just checking. Is the audio and stream stable? Still alive? Well, that's always reassuring. Thanks, Dan. Okay. Mean reversion, looking for this, not a recommendation. Rotational trade plan for today. And again, you can pick a side, and it doesn't matter. So that's our long. That's our resistance. This is a pullback. This is support. You don't have to be doing anything with this unless you want. This is resistance. This is resistance. This is resistance. You see how it pauses? Like here? So when I'm trading, and not a recommendation, I look at these areas. Why? Because sellers took control over here. Is it reasonable that the sellers that were here, and you can see the icebergs, 263, 83, 171. So we had some pretty good selling here. That when we come back, that these sellers are going to still want to sell. And now the buyers take over here. Selling icebergs up here. And then what? Possibility to come down out here and back to here. And if we take this out, then back to here. So let's just see what it does. Support. Okay. So nobody can predict any of this. What I do, and again, I'm not saying it's a good idea. You guys probably will come up with better ideas. That's why the Trader Lab exists, so we can leverage our experience. Nobody has all the answers. I certainly don't. But I know what happened here. I know the buyers took control from the sellers over here. So what is this? This becomes support. If I take a short against this, I got to be looking at this because this is where the sellers failed. Does that make sense? This? Well, yeah, you could take a long here. I think that's what you're asking me because you're leaning on this. But you also have to be, look how far back we came. So for me, I need a trigger. So the way I look at this is a trigger, right? This was a long to there. And the outside edge of this is here. And the volume is in here, which is kind of where this comes. So if it fits your risk parameter and the range is within your risk parameter, you could take a long here, but this is your obstacle. So if you have to, get in at an appropriate location that is qualified. So for me, if the market comes to a location, and I always suggest the parameters for taking a trade are also the range. If your plan calls for, let's just say, a 3-point maximum risk, and from entry to failure, it's over that, you don't have a trade. So is it a structured trade? Only if it qualifies. So I hope that answers the question. So resistance is back here. And then look at this in here. Very important you keep an eye on things here. See the liquidity in the book? That's resistance. Now the thing with liquidity, it's like walking on a banana peel because they can pull. So this might just be here with no intention of interacting. That is part of the joy of randomness. We don't know. See what happens here? Now they're gone. What does that do? Opens the door. Next layer. We're outside of the LVN. Now we've left this distribution. We're back over yesterday's high, and LVN is here. If this now can become support out here, let's see what it does. Here we pull back, potential support right here. This creates the low volume area because the market rushed through it. We then rotate. There's your buy sweep, sets up potential counter rotation out here, and then back to here. This, no clue. Okay, resistance, outside edge, outside edge. So counter rotation, LVN, resistance, and then whatever happens, happens. And I think we're caught up. You guys have questions there in the Trader Lab? And if you're visiting in YouTube, watching the stream after the fact, when it's posted, there will be a link in there. You can visit the Bookmap Discord Trader Lab community. It is open to everyone. There is no cost. I'm trying to make some adjustments here, guys. Hold on a second. Okay. So here's what you have now. At the moment, we have not come back to the fair price from yesterday. We have the possibility of coming to 57.3275. This is the naked volume point of control from this day. That's the retail price. So from a targeting point of view and not a recommendation, we've got 32.75 and we got 56.70 quarter. This one is a little more significant because it's the high volume for this whole composite. And remember, we took the stops. We did not take the stops over here. And it doesn't mean with FOMC that anything can happen. When you come to FOMC, it's always good to kind of put the Maserati in the garage and let the dust settle. It's a fundamental event and it disrupts the auction. And don't forget, FOMC, after the FOMC, there's a news conference at 1:30 Central Time. And that's where you can get some wild volatility because when Chairman Powell answers questions, he's going to talk about, inflationary expectations, potential rate cuts, what's the scheduling, what are the concerns. There's going to be a lot of questions about tariffs and how that might be handled. So these are things you got to be conscious of. I personally do not trade the news because there's no way to manage risk in something like FOMC. So I trade into FOMC, and that's not a recommendation, and I trade after. In between, what's the point? Remember, we're here to take intelligent risk, not to gamble. So, and of course, if you want to gamble, I always say go to casino and be sure to get the coupon to the buffet. Any questions? How we doing, guys? Audio okay? Stream okay there in Discord? Just trying to check up, make sure. Okay, great. All right. So yesterday's high. This is also a possible location. It is not a structured trade per se. But let me give you an idea. When we move out of range, often what happens is we come back and test it. And we got an LVN. So this is a potential long if it's part of your trade plan. And what are we leaning on? We're leaning on the buyers here, the buyers there, the acceleration coming off. We're leaning on counter rotation off of the sweep. We're leaning on potential short here, which is counter trend, and we're leaning on the sell sweep here. Liquidity came into the book. I'm putting multiple pieces together, and this is, the idea of all this is nothing is mechanical. Wouldn't it be nice? We could just kind of plug it all into something, and you just go down the basement at the end of the day, go to the ATM. Wouldn't that be nice? So this right here, yesterday's range, we can test yesterday's range and then potentially have a long off it. Not a trade recommendation. Let's see what it does. You've got chop, 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 liquidity, triggering structure, not a trade recommendation. Entry is in here. Stop would be under there. And then you're looking for yesterday's high to be defended, which is what this was. So we got to see, can we get back up to the high volume or do we just fall out? And again, not a structured trade. It's a trade of curiosity. Buyers are here. Sellers were absorbed over here. Liquidity came in. Let's watch. And it could just as well fall out. This is trading, right? So let's see what happens right here. What do we have? Structure, liquidity, absorption, trigger, area of interest, not a trade recommendation, and either we bounce back or we just keep going south. And today is a little different because of FOMC. So, and it doesn't mean you don't take your trades. What it means is you got to be thinking a little bit about who's going to initiate new positions ahead of this, because this is like the big one, the big report. So it doesn't mean you don't take your trades, but I think you have to be a little more attentive, if you will. Try to really enter well and work very hard on good entry and getting risk neutral, because in the end, it's trade management, and the outcome of any of these trades is always random. You guys have questions over there in TraderLib? We're getting a sell sweep, so we want to watch the behavior in here. Stops are under here. Icebergs are buying here. Sell stops are coming out. More sell stops. Icebergs are here, absorbing. Let's see. Looks like the sellers have the ball. Let's watch. Okay, that trade would not work if you were buying this one. If you were trying to test the test of yesterday's range. Market often tests into the range and then can come back out again or not. I wonder if $875. You test into the range. Your trigger is this. So depending where you enter, let's assume that if you took this, you'd be stopped. Now, here's something else you got to be aware of. You always have to look left. Stops are sitting under here. And of course, they're going to be under here. So subject to how you work your trades, if you just bought it in here, you would take a stop, I think. You would have to be at least 3 ticks under here, and I think you'd get taken out. And then you'd be looking for a rotation, and your resistance is going to be up here because the sellers took control over here. So it's not a trade, that I think anybody should mess with, but you can develop a trade for testing into previous day ranges, because it's important. Because if we come in, this might be defended, and if we come inside and then come back out again, sometimes it means potential continuation. And again, we don't know what's going to happen. But this is not a structured trade. This is a curiosity that you can work on. Remember, write down, you must look left. We also have another trade here that I neglected to mention, called the IBF. The IBF is when we come inside, and wherever that IB high is, where is the IB high? I think I lost it. Guys, where's the IB high? 14? Okay. When you break inside, it sets up, there's 2 possibilities here, right? We test the range, we continue. If we can't get out of there, 14 is the initial balance high. This is called the IBF. It is a mean reversion trade. None of these are recommendations. And the idea of the mean reversion trade, the IBF, is to come back to balance, which is the volume point of control, which again must be covered up. Guys, volume, oh, it's right here, right? Is this the volume point of control, 4.5, roughly? Yeah, okay. The target for the IBF is here. You also have stops at VWAP and mid. So the possibility is to come back in here. So there, get the stops out. Why? There's longs in here. Where's the swing? There, and here, and here. So if you took a short, and I'm not going to say it's counter trend, it's mean reversion. Because what's the trend today? Well, it's 2-sided trade. We are back inside the initial balance, and it is a FOMC, so whether or not where we're going, nobody knows. This is a potential target up above. And there's another target down here. We missed this one. So at the moment, it's too low. So it's also possible to continue, to squeeze higher after FOMC. I don't know if we'll get any kind of dramatic movement, but I never know that. So this is the target for the IBF. It's a mean reversion trade and also a potential stop pick. So if you come down to the VPOC, which is the mean, the stops are going to be here and here. And it's possible. That's all I know. Possible to come under here for stops. And now we're current, basically. You guys have any questions? Let's see how this IBF works. That is a structured trade. High. So these are the targets. We got one here. We got one there. Fun. And as Dirty Harry used to say, do you feel lucky? Well, do you? Which one? or none. But I suspect with FOMC, remember, market is short. We got our stops. If we mean revert, then we're looking at the VPOC and maybe the stops, and then we could really go either side here. So I have no idea, and I'm not too concerned about it because my guess is as good as anybody else's. Not better, because all we can do really is follow the trade plan and accept the random outcome. Can't know anything in this business. Believe me, if the casinos could know which hands are going to win or lose, I think they would only play the hands that win. So if they can't do it, we should not be putting our energy trying to predict. They can't, and they've been at it a lot longer than us, probably, then we shouldn't. We should design a solution for randomness. That's the business you're in. Counterintuitive, of course. You guys have questions? How much emphasis could you put on the CHVN and also at yesterday's high? CHVN is not relevant for me in this. It's really higher time frame. So it's in here, but it's not. What I look at is the most recent behavior. So that is yesterday's RTH for the squeeze, and then the developing time frame, if you will, or developing RTH, and the structure that's happening now, because we're trading now. CHVN is high time frame. For me, the CHVN is more important when we fall out of a distribution and we're kind of in thin air, because there is nothing. And even then, these higher time frame nodes are broad. The higher you go up and use the term time frame, the more slop. And then the more we come down into microstructure, there's more precision in the sense of seeing something that's freshly auctioned. That to me is more actionable in the now, in our where we operate. Hope that answers your question. I think I just saw a question. When you say you lost me, I don't understand. Did I drop out? Do I want to see a failure at the IB high before you look for the IBF? No. What that means is I need a trigger. And typically what happens for the IBF is we come under the IB and pick. And then either we get IB continuation, which would be up to this, or we come back to this, which is the current volume point of control. It's either or. But given the market is currently long, I'm kind of leaning to the south side. And here's the other piece to this. Where are the stops? Under here and under here. So if I am looking, and this is called mean reversion, and we never know, but I would suspect, and that's the word, suspect that this. So I'm leaning on the IBF more than I would on the IB continuation. And the other piece to this, let's look at the other piece, low volume node. What happened here? Sweep, sell trigger, who knows? Now, so if you don't take this, when you break under the low volume node, you are falling out of this distribution right here. Well, where's that IB? 14, 15-ish. This sets up your short here, and you're looking, for that. I'm not sure where you guys lost me. I'm talking about the IBF. Did you guys get the IBF? Okay, good. All right. This will be posted later. Dan will do his magic with it. Thank you, Dan. And it'll get posted up on YouTube if you want to avail yourself of it. So we're looking for this, okay? And it may be even down here. Not a recommendation. The outside edge of this is out in here. So what can happen is if this is too high, which it is at the moment, and we fall out here and we have the IBF, then we can do this, come down here and maybe out to here. And all it is rotational trading. And of course, FOMC, right? So that's possible because now the longs in here can get thrown under the bus with everybody else, you know. So when you're, as day traders, we're trading rotations, really, unless we're on a bullet train, and this is not bullet train weather at the moment. Maybe FOMC-wise, it might become, because when you get an input, it disrupts the auction if there's a change. If it's, once the volatility, and remember, the order book is going to thin out when we come towards FOMC. So it becomes very thin. And think about liquidity in the order book like pebbles in a road. The more pebbles, the more resistance to movement because the limit order book is absorbing the other side. Now, if you remove the pebbles, it's a much smoother surface and the market can move quicker because it's absorbing the passive side. That's why the NQ behaves like it does. And as, again, Dirty Harry would say, do you feel lucky? And that's why when you trade thin markets, you need to understand that the, quote, resistance to price movement is reduced because there's the passive side. There's not a lot of muscle on the passive side. Just a little something to suggest. So how are we doing? We're doing all right still? So nothing to do. This is the target, mean reversion. It's the IBF, and then stops. So for me, primary target, not a recommendation, is this. That's the mean. And then it's fuel. Where's the fuel? Mid and VWAP. What else do we know? Possibly we might get buyers here and revert back here. That's what we know. So depending on your plan, it's not about trying to go for, whatever, because the whatever is random. It's about planning and structure. So here, and then you might get buyers at the VWAP, you might get buyers at the mid, or you might just keep going. I mean, all that is maybe, and all that's what trading is, maybe. So let's watch this mean reversion, okay? Because that's the current trade, and if it takes it, however long it takes to do its thing, that's what it's going to take. And remember what's out here. This is a buy trigger. Stops are under here and under here, and there's the mean. So you can look at these structures, and you can look at them and go, well, so all this is, these are areas to observe. So you guys have the, we up to date. You heard everything that you were interested in, or are there anything that you need explained? Outside edge. Here's the thing. Look at this. Little micro distribution up at the high of the day. There's your micro high volume. If you open this up, you'd be able to see it. That would be your first indication of a selling opportunity. Here's your sweep. That puts me on alert for that. Come back and test. Aggressive traders who have a vetted plan and a lot of experience will know what this is. It's an opportunity for a short. If you're trading structured trades, you would not be selling this. You'd be waiting for the IBF, which was kind of around here. There's your trigger, and here's your short for the IBF, and you're trying to come down here. So all these are trades that you can vet, and these are kind of when I mention a structured trade, what I shared for you guys is a basis of understanding. Now, here's a sweep. We have to look for this. Let's just see what it does. And it doesn't have to do anything. Remember, just because there's a sweep is not mechanical. It's insight. And it's what happens after the sweep. What happens after the sweep? So what happens after the sweep? Do we get this? Or do we just ignore it and keep going? Let's find out. Watch the behavior. And I believe our VPOC is 05. I think. Is that correct? This is our target. Is that right? Okay, thank you. So this is our target on mean reversion, the IBF, structured trade. If you're new to Trader Lab, it's in the 60 PDFs and it's in many of the streams I've done. The idea of structured trades is to give you template trades, but they're not mechanical. They're all contextual. In other words, they have to fit in the condition of the market. It isn't just it comes to some place and you click the mouse. That's not the trading business. If it was, it would be so easy, wouldn't it? Just plug and play, not so much. And that's what most retail traders think this is. It's not. So the idea of a structured trade is you have something to work with, and then you have to match it up with the condition of the market. And that takes time. That's called context. So, and that I think is difficult. It was for me. It took a lot of time because I just didn't, I couldn't put all these pieces together because it always felt conflicted to me. You know, one thing's going up, something else is going down. The other one's like, call me later. And it was very difficult. So of all the elements, context was the one that was most conflicted. So I really had to break it down in the sense of priority of inputs and understand what time frame, or in this case, fractal, I'm operating in. The time is based on RTH. That's open, high, low, close. But once we get outside of RTH, when we're in ETH and developing RTH, it's no longer time. It is now fractal. And a fractal is what these kinds of things are, you know, the rotations. Absorption. So let's see what we get. There is our sweep. Who knows? I don't. So you would be risk neutral if you took the IBF. Your stop could be wherever it fails. So you scratch, and that's basically your trade. There's nothing more to this. It's random. And you go from euphoria to depression right here, don't you? So let's watch. Now, the other part of this is you put a trade on. Hopefully you get risk neutral. And if you scratch the trade, to me, that's a successful trade because you took risk. And even if you don't get paid, you got a lottery ticket, basically. So this trade looks like it's going to scratch out. And that's assuming you don't manage the trade. And I'm not saying you would, because it's not for me to say what you would do. But we know where are the stops. They're out here. So this trade would fail out here. So we have to see what happens. Micro high volume is in here. And you could see it right there. And it's not a recommendation. All you can do with this is, with any trade, is know where it's qualified, have a triggering structure, get risk neutral, know where the trade fails, and then go from there. You don't need to know anymore because you can't know anything more. So you need to leave it at that. Are you guys tracking? Did my audio drop out? VPOC migration. Now the behavior here is very important. Right here, we're either going to push north or we're going to fail from here and come back to this. This is a variable high volume node. I'm going to drag this down here because this is the last place. So retail either up or too high and come back and check right here. So this is where we're standing right now. So this is very important for the IBF. Let's watch. The target here is the VH, VN, VWAP, and mid. Are you guys with me? So one of the things that makes us all nutty is when you get this. Hyde wants you to bail out because you go from confidence to panic, fear, right? We all do. So that's a given. Don't worry about it. We all do. And where did we come back? IB high. What is the IB high retracement? Isn't that another IBF? Or not? Are you guys with me? What's a robot? We're looking for this and we're looking for that. Not a recommendation. Okay, guys, I'm pretty much done for today. Apologies for the technical issues. It is intermittent. Sometimes things work great and other times they don't. If you are watching this in YouTube, sorry for the quality. I am streaming from Costa Rica and the infrastructure is not stable. If you want to visit the Trader Lab, there's a link in the bottom of YouTube. There's no cost. There's 60 PDFs of structured trades you can download and reverse engineer. It's available to everyone at no cost. These are actual trades I've taken, plus a lot more. And there's a library of webinars that you can access, plus the Trader Lab community. Thanks again, guys. If you're watching this in YouTube, please give a thumb up, give a like. I appreciate your patience, and hopefully we'll have a better day tomorrow as far as the technicals go. Thanks, guys. Thanks again. And again, I hope you got something from the Trader Lab stream today. Take care, everybody. And remember, FOMC, mind your risk, be patient. See you soon.